In this video, guys, we're going to look at what does "don't fight the tape" mean. We hear it in books, we see it in videos, we hear it in podcasts. What does it all mean? Hey traders, a very warm welcome to you. Okay, so you may have heard "don't fight the tape" whether you're listening to kind of audiobooks, podcasts, reading books, articles, or whatever. Don't fight the tape. But if you stop to wonder what it actually means, and this is normally said by the old school traders who are, kind of tape readers, not in the sense of very short-term traders, i.e. guys who are watching the tape, not to be confused with like time and sales. That's sometimes considered the tape based on that ticker tape that come through back in the days of Jesse Livermore. Not to be confused so much with that, but tape on a broad sense, i.e. the tape means, hey, what is actually printing? What is actually happening with price? Is price going up? Is price going down? Is price going sideways? Pretty much that's it. Okay, so if the tape is saying the market is strong, the market is strong. You'd see prices going up, pausing, prices going up, pausing, prices going up. And now we'd visualize that on a chart, but back in the day, you'd see that on a tape and you'd see that over the time of day. Yes, we can look at very, very short-term tape coming through, but this is more akin to the broader feel of the market. So what does it actually mean? It basically means this. If, and some examples in, and we'll talk about some as well, if the market is strong, don't go short, right? Don't fight the strength of the market. That could be, we're in a bull market in a longer term, so don't try and be clever and start shorting stuff that's overvalued, because there is no overvalued. We're in a bull market, or flip it, we're in a bear market. You should be buying strong stocks. Same intraday. If the market is strong intraday, you should be looking for the stocks that are strong on pullbacks as a general broad perspective. I know that in some points we're kind of looking for reversals, we're looking for this, but the idea is don't fight the tape until it tells you that it has changed. If we're chugging along in an uptrend and we're pulling back, is that the top? Probably not. It's a pullback. Buy the stocks that are the strongest. The market's pulled back of 20, 30 pips. The stocks that hardly pull back, buy those, because when that market goes to the new high, those stocks are going to rip even higher. You get the idea. Weekday, we're staying short. We're not trying to buy stocks that are strong on a weekday unless we're looking for a reversal. We're not fighting the whole overall tape. If the tape is showing us as being weak, we stay short or we stay out of it. If, however, we're looking for a long, we wait until the tape shows us it's a long, and that could be we get a reversal pattern, we get something. We don't try and second guess it. We're not fighting against the tape, and the tape being where the broad flow of money is coming in, again, whether on a short term or long term. Another thing might be, hey, sometimes we get illogical moves in the market. Okay, example would be bad news and a strong market or a strong stock. So the news comes out that this company is struggling, its profit warning is not doing very well, but the stock is up 3%, gapped up 3%, has rallied 2% off the open and is holding firm. Now, logic would say it's bad news. I need to short this stock. I need to short the hell out of this stock because it's awful news. However, going back to this point, fighting the tape. If the tape is showing you that this thing is strong, don't fight it. And I see a lot of traders losing a lot of money for this specific thing. Whether you say, hey, that non-farm payroll number was rubbish, I can't believe that the US dollar is doing this, or that interest rate announcement was this, and they look at it logically. The market is not logical. The market is a group of buyers, a group of sellers. It's a supply-demand imbalance. It might shift later on. We see that quite often where it might run for a day and then shift later on. But at the moment, it's just a supply-demand imbalance. And that is kind of really coming to not fighting the tape. Forget about the logic. Forget about what you think about it. Forget about what you perceive about it, or the news, or the fundamentals, all that stuff. If the tape is showing you one direction, you align yourself with that direction, or you stay out. Either is fine, but fading it constantly is how you're going to get run over. You might get away with it from time to time, and I know you will. But over time, if you're shorting consistently in a bull market, you're going to get hammered. If you're buying consistently in a bear market, you're going to get hammered until eventually you get it right. Yeah, you'll get it right at one point, but how much pain can you take? And we can kind of shrink that down into intraday as well, guys. If you're selling an uptrend on intraday basis, and I've learned this lesson the hard way as well, is grinding up trends, trying to short them. You're just fighting the tape. And you might get on the end of one and you think you're a hero because you're selling like a tick off the high and the thing collapses and you go, yeah, I'm a genius. But when you actually look back and you go, hey, I had 3 cracks at that and I've actually been doing this for the last week or so. This is nowhere near made up for the losses. So whilst I may feel good about it, I shouldn't do because I've been fighting the tape and it's never worked in my favor. So there you go, guys. That's what don't fight the tape means. See you next one. Take care. Bye-bye.